Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, we're touching on a bit of financial results today, as usual, as earnings season continues to be in full swing. And today we're speaking about the Ansa McAL Group, the parent company, of course, the AMCL, as well as Ansa McAL Limited, one of its larger and more important components across the group for their respective nine-month period earnings ended September 2025. Now, overall, AMCL at the parent level would have had a marginal decline in earnings, while Ansa McAL would have had a more robust recovery in terms of earnings results. Let's take a look at what both stocks or groups would have done and what investors might expect in the coming months ahead. Turning firstly to AMCL. Well, for that nine-month period ended September 2025, the group reported a diluted earnings per share figure of $1.91 per share, which was a 5% decline from the $2.01 reported in that prior comparable period of 2024. On the positive side, revenues were up 11.3% from 5.24 billion to just over 5.8 billion. Operating profits also up 18.9% from 577 million to just about 686 million. Overall, however, finance costs, a fairly significant increase in finance costs from 29 to 147 million across the comparable periods, or a nearly 400% increase would have weighed on overall performance, with profit before taxes declining just a fairly slim 1.3% from 568 to 560 million. Ultimately, profit attributable to equity holders declining 5.2% from 347 odd million to just about 329 million. Now, when we take a look at segment performance, we can see that there was broadly positive performance across most of the segments. Banking and insurance, for example, increasing in that pinkish color from 149 to 184 million, roughly a 23% increase. There was a decline in automotive trading and distribution of about 47 odd percent from in that bluish segment from 125 to 66 million. And of course, there was a roughly 11 or 12% increase in construction, manufacturing, packaging, and brewing from 358 to 398 million in that greenish segment, with a widening loss in that media services, retail, and parent company segment from $63 million loss, $63 million loss in the 9 months of 2024 to an $88 million loss in the 9-month period of 2025. Now, when we take a look at profitability margins, well, impressively, operating profit margin in that red column continues to improve. And over the 9-month period of 2024 to 2025, there was an improvement from 11% to 11.8%, meaning at the operating level, the group has been able to generate more profits for shareholders from every dollar of revenue generated. Of course, inclusive of the finance costs that have been increasing, profit before tax margin narrowed from 10.8% to 9.6% in that bluish column. And of course, investors would be very keenly interested to see how those finance costs are managed, or if those recently made acquisitions and continued acquisitions pipelines are more accretive in terms of revenue to outstrip, and profits, operating profits to outstrip the increased finance costs, and certainly turn that profit before tax margin direction around in subsequent periods. Certainly, one of the major impacts for AMCL shareholders over the past several months has been that declaration of the absence of dividends for fiscal 2025 to fiscal 2027, included, and certainly in rising interest rate environment, where investors are certainly looking at cash flow yield. That has been one of the considerations that would be weighing on the stock price of AMCL over this near to medium term period. So at a price of $40.75, Ansa McAL is trading at a price earnings ratio of 12.7 times, which is above the sector average of 10.8 times. Of course, there's no dividend yield. The sector average dividend yield is around 4%. Now, with revenue growth in mind and acquisition and geographical diversification activity being positives, of course, the suspension of dividend payments would weigh on investors' minds, as well as fiscal policy uncertainty. In the case of Ansa McAL, with a wide-ranging group of businesses, certain fiscal measures that were proposed in the budget for fiscal 2026 could impact several of their segments. Of course, we're speaking about, for example, excise taxes on alcoholic beverages, as well as changes in terms of automobile duties, etc., in the electric vehicle space, as well as the used vehicle space, and of course that asset tax on banking and insurance companies of assets in Trinidad and Tobago. So based on all of those factors, we're going to maintain a stable rating, or market weight rating rather, on AMCL, with a watch outlook for the time being. Turning very quickly to Ansa McAL Limited, or AMBL. Well, for their 9-month period, the group would have reported an earnings per share figure of $1.78, which is a very commendable 28% increase from the $1.39 recorded in that prior comparable period of 2024. Driving this performance was an improvement of 9.7% in net operating income, up from about $416 million to just about $456 million. Total expenses actually decreased by 3.8% from 287 odd million to just about 275 odd million. Overall profit attributable to equity holders improving that 28% odd from just under 119 million to just about 152 million. Now, when we take a look at segment performance for AMCL, we can see that it was broadly positive, with banking services, for example, increasing just about 12% from 76.5 million to 85.8 million, a 45% improvement in insurance services from 129.4 million to, well, you're not seeing it here, but just about 89 million in that prior comparable period of profit before taxes, and an almost 200% increase in terms of profit before tax contribution from the mutual fund segment, moving in that turquoise color column from 5.6 million to 16.4 million. So again, very positive reading for AMCL within the Ansa McAL group in terms of its segment performance for that 9-month period ended 2025. Now, from a valuation perspective, we can see that a combination of decreased share prices for the decreased stock price for AMCL plus an improvement on its rolling 12-month earnings per share figure has led to more attractive valuations for the stock, certainly on a 12-month trailing period basis. Earnings per share for AMCL as at the 9-month period of 2025 up to $2.29 from the $1.78 in that prior comparable period, combined with their stock price decline, resulting in an earnings per share price earnings ratio of 13.7 times, which is materially lower than the 23.3 times at the same period last year. So at a price of $31.45, AMCL is trading at that price earnings ratio of 13.7 times, below the sector average above the sector average rather, of 8.7 times, with a dividend yield of 3.8%, which is below the sector average of 5.1%. So with improved operating income in mind, lower operating expenses, however, looking at those slightly elevated valuations when compared to sector averages, Bourse is maintaining its market weight rating on AMCL, as well as assigning a watch outlook on it on the basis of potential looming changes in terms of asset levies that could affect the group in subsequent periods. Well, that's it for this week. In addition, for more information, give us a call at 226-8773 or to Bourse. Email us at info@boursefinancial.com. And of course, you can check out our website at bourseinvestment.com where all of our research is absolutely free. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.